Today, beginning of 2026, we have again our special guest, Mr. Jorge Dyszel. He is a very well-known risk management consultant, educator, trainer of the London Metal Exchange, and author for the book To Hedge or Not to Hedge to Become a Good Trader. Good morning, Jorge. How are you? What are you having for your breakfast today?
Hey, good morning, Prarana. How are you? Well, what I'm having for breakfast, I had already breakfast, my usual mate with toast, but now I'm having just a coffee, a simple
Okay. Oh wow, I see that you are wearing a lifeguard sweater. So how come in Miami?
coffee. Well, Miami, it's doing 7 degrees now. 7 degrees. It's not that warm. We normally have like 5-6 weeks of what we call winter, with a low of 7 degrees and a high of 23, which is great. You can walk. And as far as what you asked for, my shirt, for my sweater of lifeguard, I am a lifeguard too. So that's a hobby. I've been dreaming of being a lifeguard ever since I was 10. Now I am 67 and enjoy doing this for fun in swimming pools some of the weekends. And mainly that's it.
Nice, congrats for that. Now we are in 2026. I would love to talk about your views on base metal during 2025 and in general about aluminium for 2026.
Uh, well, my general view on 2025 is very positive. I mean, we saw a market with a lot of turbulences related to Trump's administration, which imposed the tariffs with ups and downs, and later on after April with a huge consolidation in the prices, some of them not, but mainly aluminum and copper, very, very strong. And with I think we have very, very positive prospects if you want to talk about that.
Impressive. So cool that you liked our publication. In particular, what is your view on aluminium for 2026?
Yeah, I like your impression very much. Yeah, it was good. It was very, very good. Worth to read it, worth to have it as a consultation tool. Yeah, and in particular, within this, talking about the aluminum, I am very, very positive on aluminum market. I wrote a paper which is in LinkedIn. I have shared it with you about the outlook for aluminum during 2026. Yes, very, very positive I am.
You say that the aluminium market is no longer looking at today but at tomorrow. So, what do you mean by that?
Okay, what I mean by that, not to look of today, mainly when we talk about commodities market, you have a driver which is today the supply demand. The supply demand is today's related and a projection for the coming month. Yeah, but on top of that clear number, which may show an excess of inventories and a huge demand on Ali, if you add up the primary plus the metals which are consumed based on recycling, of which exceeds the production of the primary, because the production of primary is less than 80 million tons, and the demand, as you clearly also calculate in your book, new outlook is over 100 million. The excess is supplied by the recycling. But on top of that cold numbers that you can clearly see, there are the expectations, because the futures market are not precisely driven 100% on the microeconomics, on the aluminum in this case, but also on the expectations. And when you integrate the real economy users of the futures market, which are producers and consumers, the other big player, which covers over 90% of the volume, are the hedge funds, the investors. Yeah, 90%, over 90%. And the market is driven by the expectations. And this is why I mean not to look at precisely today, but look at the futures. And the expectations are, and of course, driven by people. We all integrate market, a very positive outlook for 2026, which may include the interest rates in the US to go dramatically lower.
If global growth slows in 2026, why does aluminium demand still look strong?
Yeah, that's a very good question. So let's suppose, I mean, first of all, when you drive and there is a curve, you have to slow down. Now, this is what we call a recession. Recession is a slower speed on the growth. We might see that, yeah, we might see that, but that's the macro view. In particular, what you see is we have one key driver which for the transmission, which is the copper, yeah, and the copper is almost 13,000, and it's gonna, in my view, it's gonna go even higher. So at the moment of time, the copper might be substituted by aluminum with the wires. The aluminum also is a good transmitter. Sometimes you cannot replace it, but if you have the copper driving prices too high, the consumption of Ali may go high, yeah, on the basis of a possible, I mean, it's not 100%, it's very limited replacement. But I mean, aluminum is related to the same drivers of copper, which are the electricity, the construction, the great capability of the aluminum as a resistant metals, the alloys, and as I said, and I said, and I will say, the artificial intelligence is one of the key drivers of the higher consumption of this material, and both copper and aluminum. And that is why I see a potential view, positive view on the Ali, divorced from the GDP growth.
Why is energy and not bauxite or alumina the real constraint for aluminium today?
Yeah, the aluminum and the bauxite, which were a bottleneck in the past, are not anymore. I mean, we see excess of production. You know, the bauxite is the most abundant mineral in the world, the bauxite, which throughout the process is converted into alumina, and the alumina goes after an electrolysis process converted into aluminum. You need 4 of bauxite to produce 2 of alumina, and you need 2 of alumina to produce 1 of Ali. And today the prices are much lower due to the excess of production. So I don't see there any problem. Well, you know, energy, aluminum is energy packed, so the energy is one of the key commodities which are to be demanded all over more and more. The energy is produced with the oleic system, with hydroelectric, with coal, with the oil and some other. And also the cost of energy varies in different parts of the world. So we have smelters with access throughout the historical contract to a very low price of energy that will not happen with an expansion or renovation. We talk about a cost of $40 per millikilowatts, but varies and goes up to 200. So we have made some calculations that in terms of cost, there are producers who can have around 1,500 to 1,800 higher cost compared to others due to the electricity. And electricity is also, again, a very important driver, a very important element, for artificial intelligence, data centers and so on. I mean, we have seen announcements that problems in the development were energy related. So the higher the cost of energy is, which in my opinion, it will be, the higher is the driver for higher prices,
You mentioned structural backwardation. Why should non-traders care about that much?
Backwardation. So let's remember the concept of backwardation. Backwardation is when the nearby price, when the spot price or the nearby price is higher than the future price. What does it mean? When you take a photo of today's prices and future prices, if today's price is higher than the future price, it does not necessarily mean, it doesn't mean at all the prices will go down. They mean that the prices today on the futures are down. And this is because the demand is driving up the nearby prices, which is not the case today. Today we have a small contango of $20, $30, even less on the aluminum. I guess that, and structurally speaking, the aluminium has always shown for decades contango with different special periods of backwardation. I think that due to the higher demand, we might start seeing backwardation. And that backwardation would imply a benefit for the hedger of futures, for the consumer. The possibility of hedging in the futures market will show, if we have backwardation, lower prices. Not so good for the producers, but producers have a different gimmick to use. Different strategy, of course. But we land into particular decisions on the tools for hedging.
With aluminium potentially above $3,000, how should producers and consumers hedge in 2026?
Well, that's a key question, but let me try to bring it down in the best possible simple way. If you are a consumer, for example, you build windows frame or cables or any element which demands aluminum. And of course, when aluminum occupies a very important piece of your cost structure, we should consider to hedge. And particularly when you have a backwardations, you have the possibility to hedge at lower value. And if your sale price is fixed, of course, you shouldn't run the risk, especially for consumers. You can always go into the futures market and buy, period. And if there are backwardation, buy at a lower price, period. That will be it. In terms of producers, it's interesting because if you are a producer or you are a stockholder, and remember, what I mean is when you sit on certain commodity at a fixed price and where you run the risk of a lower price. But if we have a positive look, you may leave something without a hedge, or you can hedge using futures. But you can also hedge using puts, which is the right to sell. But you will tell me, well, Jorge, the volatility is high, the cost of the insurance, the cost of the put is high. So it pretty much depends on your view. So if the cost of a put is $150 and you buy a put to protect yourself, you buy the insurance, remember, the case of the hedger is the opposite of a speculator. The speculator who buys put wants the market to go down, and he needs the market to go down for an amount higher than premium paid. That's a speculator. The hedger who buys a put, a protection against an accident, which is the price is falling, is the same as your car. You buy the insurance, but you don't want to crash your car. So when you are a hedger and you buy the puts, which are the right to sell, you just pray never to exercise them, and you need the prices to go higher than the premium paid. Yeah? And why did you buy the put? Just in case I crash my car or the prices go down. Okay? Being a producer, being a stockholder, you have paid already for your aluminum stocks, yeah? A fixed price, so you run the risk of the prices going down. So having said that, as the same, and if the cost is high, you can buy out of the money puts, which is the same as when you have your car and you have your insurance and the car worth $10,000, but you decide to run partially the risk, say 10%, the same you can do with the puts on aluminum. That means buying an out-of-the-money put. And on top of that, you may do a collar, which is buying that out-of-the-money put, selling out-of-the-money calls. That's a collar. And you can go into a zero-cost collar, which is no cost at all. And in a band, if the prices fall, you have the protection. If the prices go higher, you get some portion of the higher price, but you will be hedged at a higher price, and that will be it.
So yeah, thank you, Jorge, once again.
Oh,
So
thank you
likewise,
so
we
much.
end our 4th episode of Breakfast with Jorge. Please be with us so that you know about when the next episode is coming. Like our video, subscribe our YouTube channel, and also do let us know about your views in the comment section. Bye bye.